everyone, welcome to another video. So in this video we'll try and understand the concept of TDS on certain kinds of payments being made to the partners of partnership firms. Well, in the budget of 2024, which was announced on 1st July 24, the finance minister proposed a clause which later became the section explaining the concept of TDS on certain types of payments being made to the partners. So in the course of this particular video, we'll try and understand what the concept or section is all about of this particular TDS, from when the section will become applicable, what is the minimum amount or the threshold limit above which TDS will become applicable, and finally what are those types of payments to partners on which the firm will have to now deduct TDS. So first things first, and that is all about this concept of TDS. Now, as per section 194T of the Income Tax Act 1961, from 1st April 2025, TDS will have to be deducted by the partnership firm on certain types of payments being made to the partners. The rate is going to be a high rate of 10%. It's not going to be 2%, 5% or 5%. It is at a high rate of 10%. And the threshold limit is going to be 20,000 rupees per partner per year, which basically means that if the partnership firm is going to make certain payments to the partner and the total of all these payments exceed 20,000 rupees per partner per financial year, then the firm will have to start deducting TDS. And this, as explained before, is applicable for all kinds of partnership firms, whether it's going to be normal firms or even LLPs. Now, what are those kinds of payments on which TDS will become applicable 1 month from now, basically from 1st April 2025? One is remuneration to the partners, commission to the partners, bonus and interest to the partners. Remuneration, which is going to be based on the book profits of the firm. Commission, bonus and interest, which is as per the partnership deed of that particular partnership firm. So in all these kinds of payments, TDS will apply, and if the aggregate of all this put in a financial year for a partner is more than 20,000 rupees, then yes, TDS under 194T at the rate of 10% will apply. So what are those payments on which TDS is not applicable under this particular section? One, on drawings made by the partner from the partnership firm, on loans that is paid to the partner by the firm, on reimbursements paid to the partner because the partner would have incurred a lot of expenses on behalf of the partnership firm, and finally on the repayments of the loan which was earlier given by the partner. Now the firm is repaying the loan to the partner. On such repayments, there will be no 194T or this particular TDS that will apply. The next important question is, when should the firm deduct TDS? So it says that the firm, at the time of making the payment of remuneration or commission or bonus or interest to the partner, or at the time of credit to the partner's capital account, whichever comes first, at that point in time, TDS will have to be deducted by the partnership firm. The earlier of payment or credit to the capital account, whichever comes first, whichever is earlier. So now we've understood this particular section 194T, which has a rate of 10%, threshold limit is 20,000 rupees. It is going to be applicable from next month. That's basically from 1st April 2025. And it is applicable to all kinds of firms, be it normal firms or even LLPs. Now, what is the implication or implications of this particular section? Now, there are a lot of firms who have age-old partnership deeds running for many, many years. And now it's the time for them to have a relook at the deeds and revise the deeds, because now you have 194T carrying this TDS compliance coming into picture. Also, a lot of firms do not follow the practice of booking on a monthly or a quarterly basis the salary, remuneration, interest, bonus or commission. They wait for the financial year to get over, then they finalize the books, close their books, find out the book profit, and then determine what is the salary remuneration payable to the partner. Now, this practice often becomes quite tedious and it draws almost to the fag end of ITR filing due date. Now, this needs to be discontinued, because now you have 194T and the firms will be compelled to immediately close their books of accounts after the financial year is over, find out the salary remuneration payable, because now you have a TDS due date that becomes mandatory, that becomes applicable and mandatory to pay TDS. And yes, definitely more compliance on the part of the partnership firms, because now you'll have to deduct TDS on each such payment to the partner. The firms will have to remit the TDS and also file the returns, because only then the partner will get the credits when he or she files the income tax return. To sum it up, this section does not look very favorable to the partnership firms, be it normal firms or LLPs. But the intent or the objective of the government is to basically fix gaps in tax legislation and also to promote timely closure or finalization of the books of accounts for these partnership firms. Well, I hope I was able to make things clear through this particular video. If you like this video and you want to show your support to us by hitting and you like this video, you could also show your support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Also, for those who have watched this entire video, as a small gift, I've also pinned a one-page note about this section and the compliance and the applicability, which will become handy to you for future reference. So see you guys in the next video. Take care and thank you.